welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the course of the show. And today I'm sure you have a lot of questions to ask. So keep commenting on our live feed and we'll have it addressed by our technical expert. But first, let's see what the global handover has been like, and it's looking fairly worrying. It's a carnage across the board. European stocks closed sharply lower on Monday as investor sentiment was dominated by the prospect of forthcoming interest rate hikes. All the key indices closed lower anywhere between 1.5% to 2.8%. Intense selling of stocks was also seen on the Wall Street. The S&P slumped 3.9% to its lowest level since March 2021 and falling more than 21% from its Jan record. S&P500 officially dropped back into bear market territory ahead of the Fed Reserve's two-day policy meeting this week. Meanwhile, the Dow tumbled more than 876 points, roughly 17% off its record high. Nasdaq tanked nearly 4.7% or more than 33% off its November record. Stocks across Asia Pacific too continue their slide. For Indian markets, the SGX Nifty is indicating a weak open. Let's get going and discuss some of those stocks and the markets at large. Sacchitanand Uttekar of Tradebulls Securities joins us now. Good morning. And well, it's going to be an important day to watch out for. What are some critical levels on the benchmark indices to look at today? Because we're looking at a negative start once again for the Indian markets. The handover, the overall sentiment has been very weak globally as well.
Good morning, Karunya, and thank you for having me on this show. Clearly, the way the global setup is, our markets are not at all, different. In fact, if you look at the overall trend there, it has been on the bearish side, and similar trends are being witnessed in our indices as well. If you look at the entire setup, clearly it will be more rewarding to just follow the trend, and the bearish trend is clearly evident. So if you see the last 2 weeks, we have clearly been seeing a low top, low bottom formation on the weekly scale as well as on the daily scale. The kind of opening that we saw at the beginning of the week, a 3% gap down, along with the critical support of 16,000 being breached, is again, reiterating this fact that this particular bearish trend is here to stay. So if you look at some of the key indicators here, when we look at the market from a technical standpoint, we have the RSI, which has again breached below the 50 mark. It has been trending well, and it is now scaling lower towards 35. We have the daily ADX, which has started moving higher. Now this is an indicator which really signifies the amount of momentum that could be witnessed here. Its negative DI has already shot up about 25 mark, and it is a significant reading. So we are expecting that once the ADX also crosses 25, probably we may see another sharp fall in this particular market. So clearly, it's a sell on rise market. Yes, we are at an oversold kind of situation when we look at the intraday charts. We have a put call ratio which is close to 0.669 to be precise. So there are bouts of bounce backs which would be evident, but I think this bounce back should provide an opportunity for you to create fresh short positions. So clearly, until unless we don't see a firm reversal setting in, until unless we don't see the gap resistance being taken off, which is placed at around 16,600 as of now, clearly we are expecting that this particular move should grind lower towards 15,100, 15,000. For the day, I think 15,580 would act as a good support. Probably we are starting, or indications are that we might start the day with 100 points gap down. But probably we may see some kind of support getting created at say 15,600, 15,580, and that particular level could hold for the day. On the higher side, there's a lot of resistance right up to 16,000 levels. So probably even if that bounce back happens, that bounce back will again give you an opportunity to create fresh shorts. Even on Bank Nifty, I think 33,000 remains a crucial support. And probably there are chances that sooner or later we may see slippages below the same, and 32,400 could be witnessed soon. The resistance is very much evident there, 33,800. I don't think that particular resistance will be breached in this particular weekly expiry. So net, I think both the indices are exhibiting weakness. Probably there could be bouts of bounce backs, but those bounce backs may be fragile, and we may see this major trend getting continued throughout the week, which is on the bearish side.
So which pockets of the market look oversold to you? You were just talking about it. Any particular stocks or sectors that one can look at if and when there is a further dip, one can lap it up?
Well, as of now, it's a very strong rotation. So picking one pocket is very difficult as of now. Last week or a few weeks back, there were signs that IT may stabilize, and probably that's why a lot of positions were added in those pockets. But clearly, if you look at the data and if you compare that the current data with the previous past 2 weeks. That is one particular area which looks very difficult right now. Even after an oversold reading, we saw a temporary bounce back, and again, we are seeing fresh shorting, shorts getting added on the IT space. So, there's no specific pocket which is indicating a very major oversold kind of an area, and that's why I think you should wait out, have some patience. Wait for the reversal to shape up, and then probably start positioning on the long side. But as of now, I think we may see temporary bounce backs, but those bounce backs I think are unhealthy, and probably we may see further weakness going forward.
Okay, all right. Typically on a day like this, I'm sure a lot of stocks will be reacting to the overall market mood. But let's pick out a few names where there has been some corporate developments and which could be, buzzing in trade for either ways, up or downside. Delta Corp is one such stock where HDFC Mutual Fund has bought additional 2.15% stake, and their holding has now increased from 7.06% earlier to 9.21%. So they've upped their stake in Delta Corp, HDFC Mutual Fund. Technically speaking, Sacchitanand, how does a Delta Corp look to you right now?
Well, after 3 months of a sharp decline, it is obvious that the indicators are displaying some kind of support getting established, some kind of termination here. But I would rather wait for this particular reversal to shape up, because if you look at the daily RSI, it has really slipped below the 20 mark. It is scaling lower towards 17. And probably we may see a sharp bounce back getting, could be witnessed once the stock starts trending above 190, 192 levels. So I think, one should wait out. I think the stock is also in an F&O band. So probably a relief rally above 192 could be participated. But as of now, I think the weakness is very certain, and one should continue with, the weaker trend which is there, unless we don't see a reversal getting shape up, and the closing level should be above 192.
Okay, understood. What about a KPRE Global? There also has been some bulk deal action. LIC has bought about 35.4 lakh shares, and there also they've upped their holding from 5.04% to 7.05%. So a good 2% stake has been added on. KPRE Global, a stock that we don't talk about very often, but definitely could be the cynosure of all eyes today. How does that look on the charts?
Well, on the price on the weekly scale, there is some kind of a consolidation here. We saw the stock, scaling towards 805, and post that we have seen a sharp decline. We saw a swing low getting established around 540, and this is the zone wherein but there is some support which is evident. So probably we may see this particular stock oscillating within this range of 840 to 540 in the coming months. So as of now, I think it is quite sideways. There's no clear trend which is indicating fresh weakness on an immediate basis. But I think we may see this oscillation getting continued for next couple of months.
Okay. All right. And since we're talking about bulk deals, just one more stock that I would like to flag off, Ather Industries. SBI Mutual Fund has bought 3.2 lakh shares, and their holding has also increased from 4.9% to 5.2%. Ather Industries, once again, discussed very rarely. How does this one look on the technicals?
Well, not much data to talk about. I think it's a recent listing, so we only have few days of data. As of now, if you look at the last 5 trading sessions, it has managed to sustain or close above the 760 support zone. And on the higher side, there is quite a lot of resistance around 800, 805. So probably a breakout or a breakdown, post that one should start positioning for this particular stock. But as of now, I think there's less data, and whatever data we have right now is indicating a range-bound action.
Okay, all right. Sacchitanand, just stay on hold with us. We'll come back to you for more questions and viewer queries. But let's talk the fundamentals of the markets as well. Anubhav Sahu of MC Pro joins us now. Anubhav, what do we do with a market like this? The global handover has been very alarming. S&P is in bear territory. Lots of key indices have cooled off significantly from their record highs, from their recent highs as well. So tell us, how should we read into the markets right now, going into trade today and for the next few weeks? What is it that the investors should be watching out for? Anubhav, I think you're on mute. Can you unmute yourself?
Hello. I'm sorry. Last few data points across the globe on the inflation side has, of course, spooked the market. Other than that, there have been few inflation expectation surveys which were also pointed to a higher inflation expectation for 3 to 5 years. This also unnerving for the market. And along with that, as for the US market is concerned, a strong labor market report wherein the unemployment rate was 3.6%, near record level. That kind of this series of data kind of gives a signal that the market is now expecting more hawkishness from the central bank side, and in reaction to that, of course, the yield curve has uplifted across the board, more for the short term, which are more sensitive to Fed rate hikes. Yield curve itself has inverted, and that is unnerving the market and leading to kind of decline we are seeing for last few days.
Anubhav, how real?
So I think next few days one needs to watch out. Of course, one is the Fed, the US Fed policy meet. More so for the forward guidance, how they look at, because before a few of the data points which came up recently, there was a market expectation that towards the end of this fiscal, towards the end of this calendar, probably Fed may pause a bit after doing a front-loading of rate hikes, but probably that the case is not in the radar right now.
Okay. How real are the recession concerns? Because if we look at US bond yields, the 2 and 10-year bond yields have inverted, which is usually an indicator for recession, and this has happened for the second time this year already. So talk to us about the key indicators that you are also looking at, and talk to us about whether investors should be worried about recession and about inflation worsening.
So in the past, yield curve inversion or something like 2 years or 10 years kind of a yield curve inversion is seen as a leading indicator for major economic slowdown or recession. Having said that, there's of course a big time lag when this kind of thing happen. Now, as far as this yield curve inversion, one has also to understand that it's a reflection of a sharp spike in short-term interest rates in reaction to a kind of a ratchet up as well as a US Fed interest rate hike cycle. So currently, for example, the Fed policy rate is around 1%, and the terminal rate which the market is looking at is around 3.5%. So that has a reflection on the yield curve as well. As far as demand conditions are concerned, the growth condition concerned, US continues to be strong. Of course, there are some pockets across the world where there are some growth worries, and this is what one needs to look at. For example, Europe is one, which of course has taken decision to uplift the rate, to start the rate hike cycle, but the growth prospects are not strong, and they don't have a strong lever as far as control over inflation because of the supply side issues. So those would be, so some of the major economies would be a more closer watch as far as slowdown is concerned or recessions are concerned, for example, Eurozone.
Many brokerages are also revising their forecasts for rate hike cycle and for the quantum of rate hike. So that could clearly be something that may spook the markets over the near term. But tell us, what is in it for the investors now? Should they stay away, or should they sort of use this as an opportunity and invest in stocks that perhaps still are fundamentally strong and are poised to do well and poised to rebound sharply?
So quite a tricky situation right now, because if you look at trailing valuation multiples or various other metrics, so both for Nifty and broader indices, the valuations are much more saner right now. Some of the metrics are now much closer to what it was prevailing during before COVID crisis. So one way to look at it is that the valuation froth has come down. But however, here one also needs to understand that the valuation derating which has happened for last 2 quarters has been a function of margin compression, so to say. And there's a high potential risk in time to come that there could be earnings downgrades because of demand destruction. And now, if that plays out, so valuation may not necessarily look saner, in fact, could be still expensive at the broader level. But having said that, we still think that at the bottom approach, there are a number of opportunities which investors should start looking at. One should be selectively constructive from a multi-year investment horizon. So on a staggered basis, okay, so there are some pockets which investors can look at. For example, financial is one space which is a clear beneficiary of interest rate cycle. And some of the names here, of course, have done quite well as far as managing NPA is concerned. IT is another great sector to look at. Post sharp derating, this sector has seen both in India and US. And here, of course, demand visibility is still one of the strongest among the sectors. Of course, so there are a few names where in IT also one can look at. And then chemicals, which is another credible space to look at given the China Plus theme and supply chain de-risking thing going on. Of course, one needs to focus on specialty chemical names which have a credible moat, so to say. But overall, I would say that while selecting for stock, one should be looking for companies with pricing power, a strong balance sheet, and valuation. So these are the factors, these are the vectors one should look at before selecting companies. But given that the interest rate cycle is up across the board, across the economies, and there would be marked volatility like this, which we are seeing for the last few days. So one should be staggered in approach.
Okay. All right. Thanks, Anubhav, for joining us and for helping our viewers, put things in perspective and also keep some key sectors and stocks on their watch list. Specialty chemicals, financial names as well could be some stocks that you may want to keep on your watch list. Let's bring back Sacchitanand to talk technicals. We're getting a lot of viewer queries as well. We have one question on the IT pack. This is coming in from Kamalaja, and she wants to know which IT stock to buy right now. She's planning to start investing in this particular sector. So do you have any names that look attractive at the current juncture?
Well, if you look at the index per se, it is almost down 30%, and I think it's wiser to be with the large caps. In fact, we have Infosys and TCS, which have also corrected substantially. So as of now, the trend has been weaker for all the pockets, but given the fact that the IT pocket itself has corrected by 30%, it's a good idea to stay with the large caps as of now. And probably once we see a firm reversal getting established on the Nifty IT index, then probably we may start looking at some of the mid cap pockets. But as of now, I think it's better to be with the large caps.
Okay, all right. Another question is coming in from Shubham Srivastav, and a couple of other viewers also have written, and they want to know about KEI Industries and they want to invest for the long haul. Last 2-3 weeks have been quite interesting for KEI. From 1100 levels, it has seen a steady uptick. Right now, I think it shut shop at 1265 levels yesterday. Is this upward momentum going to continue on a KEI?
Well, clearly, there has been a lot of resilience been displayed by the stock. It has still not, breached below its previous week swing lows when you look at the entire structure on the weekly chart. So clearly, there is a lot of strength which has been displayed as of now. The important support for the stock is placed around 1150, and I think in case if we see a closing below the same, probably we may see some distortion of the ongoing bullish trend. As of now, I think consolidation would be healthy, and probably once it starts trending higher above 1330, 1340 kind of a zone, that is the level wherein some momentum could be witnessed in the counter. But definitely, the kind of resilience that it has displayed, it is a good idea to hold on to the counter with a stop loss below 1140 as of now. And if you're chasing momentum, then I think you should wait out for a breakout to be established above 1340.
Okay. The next stock we'd like to address is Zomato. Shiv Kumar wants your view here. This also, of course, has been a recent listing, does not have too much on the historic trends, but a decent bounce back seen from 50 rupees level lows, but still the stock continues to be very weak, very, very volatile as well. So what is the trend that you foresee?
Well, honestly, we have been on the negative side of the trend, and since almost 6 months now that we have been communicating that every rise has to be sold on. But if you look at the last couple of weeks, this is where we are seeing a shift in that particular trend. So from a low top, low bottom formation, we are seeing some signs of consolidation to cool off, and probably we may see this particular stock scaling back to levels close to around 100. So that's why we have been recommending a lot of buys in this particular counter. The first buy was initiated somewhere close to 57 levels. We had a probable target of around 80. Post that, we have seen a lot of volatility in the market, and despite that volatility, the stock has not scaled below that particular level. So I think there is some evident sign of accumulation here, and probably once market starts trending higher, we may see some outperformance in this particular pocket as well. So as of now, I think every decline would be gauged as a healthy decline, and the stock should be accumulated in your portfolio. Keep a stop loss somewhere close to 45 on a weekly closing basis, and review your stance once it starts trending above 100.
Okay. All right, that's good advice coming in on Zomato. Restaurant Brands Asia, essentially for those of you who don't know, Burger King India. This is the company that we have our next and last query for. Sachin wants to know your view. Tell us how it looks on the charts, because if we look at the last 1 month trade, the stock has largely been range bound in that 10 rupees plus minus levels. So it has been oscillating somewhere between 90 bucks to 100, 105 levels. So do you foresee any meaningful action here?
As you rightly said, it has been oscillating, and it's better to avoid the counter which is oscillating within a particular range. We don't see any major signs of strength here. Probably another dip towards 90 is something that could be on the cards immediately. Post that, I think one should review the stance. But as of now, I think both the indicators are flat. If you look at the price action, it is indicating further range bound action. So probably 115 to 90 is the range within which it should continue for the next couple of weeks.
Okay. What about your stock calls, Sacchitanand? We'd like to know the stocks that you are closely watching out for.
Well, since the market trend has been on the weaker side, we have been highlighting a lot of short trades. Adani Enterprises is something that has been on our short radar. If you look at yesterday's price action, we saw a breakdown below the 2150 support. We have the 5 and 20 day exponential moving average giving a negative crossover on its daily chart. And if you look at the RSI, it has been which was trending above 53 levels during the last week, has slipped below this 50 mark. So probably these are all signs of further weakness. We are expecting the stock to scale lower towards 1980. That will be the positional target. The stop loss for the trade should be placed at 2135 and fresh shorts should be added. The intermediate target is placed around 2035 and the positional target is at around 1980. The other sell call that we have discussed with our clients is the Larsen Toubro Info LTI futures, which has breached below its 8-day support, which was close to around 4200 levels. If you look at the entire setup, we expect further weakness to creep in most of the IT pockets, and this particular stock may scale lower towards 3880. From an intraday point of view, we are expecting a swing towards 3960. A short position should be added with a stop loss at 4110. The intraday target would be around 3960 and a positional target of around 3880.
All right. Just before we let you go, what will be, some names that you will be watching out for in trade today? You've given us your stock ideas, but anything that, as an index or any of these individual names that you will be looking at?
Well, Bajaj Auto, has been on our buying radar, and I think this particular stock is also, trending well above its important resistance level of around 3,700. So I think this profit would be interesting. Another auto stock, which is Maruti, it has also shown a lot of resilience. In fact, the immediate level to track for Maruti is around 8,020. In case if we see, markets trending positive, and if we see Maruti, scaling about 8,020, then probably, it will be a good idea to create some long positions there. We are expecting a move towards 8,300, which could be triggered once we have a firm closing above 8,020 levels. So these are the two stocks which could end up on our buying radar from a trading perspective. But net, I think the major trend still remains on the negative side. So focus would be to look out for more short positions.
All right, so two auto stocks as well to keep on your watch list if you wish to, Bajaj Auto and Maruti. That's all we have in this edition of Morning Trade. Thanks, Sacchitanand, for joining us. We're wrapping up Morning Trade with Moneycontrol in association with M Stocks by Mirae Assets. Stay tuned to Moneycontrol. Markets with Santo and CJ comes up next.